Okay. So good afternoon, everyone. Good morning. If you're in East Coast, it's good afternoon or good morning. So thank you very much for joining. Today we are going to focus more on small business owners. If you are a self-employed, 1099 contractor or a small business owner, then this session is for you. Last week, couple of days back, we have done an exclusive session on individuals. So now we will be focusing more on the self-employment. Self-employed or business owners. So I'm going to start my presentation. So our intention and our objective is to help you to keep the money what you are earning. Being a business owner, our lives are not easy because we really day to day we go through a lot of stress. We sacrifice so many things. We sacrifice our family time, we sacrifice our personal time, we sacrifice weekends and many more things to build the business. But at the end, whatever you are earning, that is not, every dollar is not yours. Whatever you are earning, every 30-40% of your every dollar you are donating to IRS. So it's like one of the business partner. We have a business partner who doesn't do any work for us, but at the end of the year, they come and say that, come on, give me my 30% share. So today I'm going to cover about how we can handle those things and how we can save the money, and keep the money what you earn. And today whatever I'm sharing, it's only my knowledge. I'm sharing my experience with the community. So sometimes it might not be applicable for your scenario. Please talk to your accountant or CPA and ensure that those are available for you, or at least schedule a meeting with me. You can schedule a meeting with me. You can see the barcode in the bottom of the screen. You can scan it and you can schedule a meeting with me. Yeah. Now, if you are hearing me for the first time, this is a very brief about me. My name is Anil Grandhi. I have 20 plus years of experience in the core tax finance fields. Earlier, I worked for Amazon, Starbucks, PricewaterhouseCoopers. I have been serving as a Forbes Finance Council member, and I have been receiving so many awards every year on year. We are based out of Frisco, Dallas, but we have licenses to do the businesses in all 50 states of America. We are a tax planners, tax planning, bookkeeping, wealth building strategies, helping high net worth, ultra high net worth individuals on estate planning and also CFO services and also India compliances. I'm also a chartered accountant from India. If you are thinking about selling a property in India, how do you move money from there to here, or how you can send the money from US to India in a legal way. And and we are 100 plus employees right now. We are a team of CPAs, chartered accountants, and many other finance professionals. And apart from that, we are also have expertise. We do also have a group of companies. One of the group company we exclusively handles audits, reviews, and also SOC audits. If you are developing any IT company, any product company, then you might need a SOC audit also. So those things also we cater. And as I mentioned, we are experts on the tax planners. We personally strongly believe that a lot of value can be brought to the business owners by having a quarterly meetings. So rather than meeting the accountant yearly one time, we meet our tax planning clients on quarter, and we customize the tax planning strategies for them, and we also help them on retirement guidance, investment guidance, and also estate and probate guidance. And I get lot of inspiration and motivation from the wealth builders. So wealth builders like Warren Buffett, Jeff Bezos, Elon Musk, Michael Bloomberg, and also our President Donald Trump, who are very good on wealth building. When you want to do the wealth building, running a business Generating the revenue, making a profit is one level. After that, wealth is different. Wealth building is much more complex, a lot more planning is required. When you are expert in your own business, you can do anything like this. Like example, even you wake me up in the midnight, I can talk about taxes, wealth, financials, planning and everything. But for a business owner, you might be an expert in that. Like maybe if you're an IT professional, you might be expert in that area. But what about the other area which is not you tapped? Financial planning, retirement planning or wealth building comes with a lot of complexity, a lot of attention and planning is required. And many accountants or CPAs says, hey, you can't do anything more than this, you have to pay the taxes. But if you look at the details, there are two categories on how you save taxes: tax evasion, tax avoidance. Tax evasion is deliberately doing something wrong to save taxes. Tax avoidance is legitimately in a legal way how do you save taxes. We never encourage anyone to do something wrong. Legally there are ways. That's what, as I was mentioning, all these wealth builders, no one is behind the bars. Jeff Bezos, Mark Zuckerberg, Donald Trump, look into their profiles, look into how much taxes they pay. Almost zero. But we have been paying 20, 30, 40% in taxes. They do it legally. Those guys do it legally. In the legally, there are many ways. But when you want to do it legally, and if you expect your accountant to do that, help may not work for you, because your accountant or CPA, their role, for what purpose you appointed them? You appointed them for the post-mortem job. That means what happened in the last year, put it in the paper and file taxes. Our accountants our regular accountants, they manage their books of accounts. But what happens? People appoint accountants for the post-mortem job, but you expect them to do advisory role. Like example, you go to a general physician or family physician and ask them to do a bypass surgery. That is not their that is not their expertise. Same way, so that's what it comes with a different game. If you really want a good quality of work, you should not look for cheaper services. Your short-term savings can erode your long-term profitability. So it's very important with whom you work, with whom you work in the long run to build your wealth. What you pay, what you get. So always look for the best people rather than cheaper services or better services. And it is practically possible. I have so many examples where we are able to save hundreds of thousands of dollars in taxes with a proactive planning. Unfortunately or fortunately, in the whole US, the number of advisors, tax planners are very limited compared to the very number of accountants who files taxes. So people think, oh man, my accountant is not helping, or my accountant is asking me to pay these taxes. That's what the reality they think. But practically a lot can be done. And there is 5 reasons why business owners overpay to the IRS. The first one I want to say is treating tax filing once a year task. If you are thinking about taxes only at the time of filing your taxes, definitely you are overpaying of taxes. Then missing deductions, credits and elections. There are so many opportunities are there. IRS has come up with hundreds of strategies which could help you to bring down your tax liability. But if you don't claim, you end up in paying taxes. You have an income, you have to claim all relevant applicable deductions so that you can bring down your tax liability. Then you need to apply relevant applicable credits. If you don't work on this, it won't help. If you think that only whatever is there in your bank account, that's what your financial statement, that's what help you in filing your taxes, you are missing. As per IRS, though there are so many strategies are there which can be implemented to bring down your tax liability. using a wrong entity structure. When we start our business, we might start with just a one LLC, single member LLC. Because you might be working somewhere at the same time you want to start a business, you started an LLC. But over the time, your business has grown. But you are still using the old structure. You need to reassess whether do you need to convert this as an S corporation or C corporation. Are you taking enough salaries from your S corporations or not? Are you contributing? Are you including your spouses into your business or not? Are you including your kids into the business or not? There are different parameters. When you started small, yes, then you started small. But when you are growing, you need to think big. You need to think, you build your team also accordingly. Not leveraging retirement and investment tools. There are so many opportunities are there on retirement planning. You are not optimizing it. And also investment tools. There are many tax smart investment strategies are available, which we are going to cover in this presentation. And no one is coordinating the plan. So if it is like you have an accountant, you have an advisor, you have a financial advisor, you have an investment advisor, you have an insurance agent, but each you are working with multiple people. You need to understand, you need to get hold of one guy who can understand, who can work with all these people. Then you are optimizing it. Otherwise, whatever your insurance agent or financial advisor is saying, your CPA or an accountant is not familiar with it. They both need to talk. Or otherwise, you need to find a guy who can understand both the sides. That's why building a strong team is very, very important. A success will not possible over the night. Donald Trump is not a CPA, not a certified tax planner, or not even an accountant. But he pays zero taxes. Jeff Bezos is not. Elon Musk is not an advised financial guy. But still they are not paying a lot of taxes because they built a strong team who can advise them, mentor them, guide them, help them in building the wealth on step by step. So that's why a team is very, very important. Hey Anil, really is it possible to save taxes? You might be thinking, I have been paying taxes, I have been filing taxes for the last 20 years, 30 years in US. But I want to tell you, on average, and I'm just taking a rounded numbers here, on average, if you're making a $1 million of income, maybe $400,000 on the business on the W2, $600,000 in the business. For $1 million, on average, you pay $400,000 as a taxes. If you can find a legal way how you can keep this money, and if you can start investing, imagine the wealth, how much you can build. You don't need to do any extra work to build your wealth. Just close that hole in your pot which is leaking in a legal ways and keep that money with you. Start reinvesting that money. You can build the wealth. And the real scenario, the real cost of not planning. First, you are working on a reactive mindset rather than proactive mindset. If you don't plan it, you don't know, all of a sudden when you file your tax returns, you get all of a sudden bill of $120,000. Where do you get this money to pay? Because you are not working on proactively throughout the year. Financial cost. So if you don't plan it properly, if you just think about taxes, only just filing of taxes at that during the March and April or September or October, you might be missing so many opportunities. It has a cost. And missing wealth. And if instead of paying hundreds of thousands of dollars to IRS year on year, if you can keep that money and invest this money in your long-term planning, retirement planning, kids education planning, or maybe buying some vacation home, or maybe building a real estate portfolio or stock portfolio, you are missing the wealth without any extra effort. If you can find the way how you can save the money legally, that money can be invested and you can build the wealth. You are missing an opportunity to build the wealth. That is most important. We all are working hard not to pay our employee salaries, not to take care of house EMIs. We are working hard to build wealth. Building wealth is what our one motto. If you think that, hey, I am doing a service to the community, then go and start a non-profit organization. Don't run a business. Our objective is to build a wealth which has to be protected, which has to be passed on as a legacy. If you don't plan, if you think about taxes only at the time of filing of taxes, you are missing opportunity. You have to think about the taxes from January to December. Otherwise, every month, 10 days of your time on the one third of your working hours are getting wasted in donating to IRS. Then, and you may say that, Anil, is it really possible? Do you have an experience? Of course, yes. We have hundreds of thousands of dollars, hundreds of clients we have every year whom we have been helping. On average, historically, we are successful in saving around $47,000 in taxes. Why I'm having this slide here is I am talking with experience. I am not saying I'm talking here by working with hundreds to thousands of clients on tax planning. Now, I'm not talking about tax filing here at all. I'm only talking about tax planning. And these savings are not 1 year. One time you done the tax planning, every year you are going to save this money. See, like example, see how many times we negotiate on $100, $200 to save when you buy something outside. During the Thanksgiving time, how many of us spend a lot of time on doing the shopping to save $1, $5, $20, $10, $100? Now we are talking about thousands of dollars every year. I want to give an example here. So a tech consultant who is working on the W2 for $300,000, he is also doing some part-time through 1099. He's making a $200,000 of income. He has a total income of $500,000, and we noticed it. He has been paying around $68,000 in taxes, but with a planning, we are able to bring it down from $68,000 to $21,000 in using a legitimate and repeatable strategies. That means first year you set up everything. Second year onwards, you don't need any more planning in detail. You just need a recurring. You need to do same repeated strategies. One time, if you don't even have time and effort to do one-time cleaning, you will not build the wealth. I mean, it may take more time to build the wealth. And one time you do this planning, year on year, you are going to save a lot of money. I am giving with an experience of what I'm talking. And also, if even you save 1 year $47,000, in the next 15-20 years, if you can keep the money, whatever you are saving, you can build incremental wealth of millions of dollars in net worth over the time. So this is the power of tax planning. And what happens when you plan in advance? First, peace of mind. When you have planning, you don't need to be panic when you file your taxes. Number two, biggest savings. When you do the planning, you have much more time to think through, identify the strategies and implement them. And wealth growth. Instead of donating to IRS, legally you can keep that money, save this money, maybe for our kids' education, maybe for our retirement planning, maybe to buy a couple of properties in India for our parents, or maybe in a future assets you can build with zero incremental effort, just only by instead of just saving the money, instead of paying to IRS, save the money for your future. And when I talk about taxes, there are three types of incentives. Tax incentives are there. Deductions. There are multiple. On average, we pay 20 to 35% in taxes. If you are in 35% tax bracket, for every $1,000 extra deduction you are getting, you are saving $350. And credits. There are many credits are there. Education credits, tax credits, or R&D tax credits, and then there are different types of credits are there, and those credits are dollar to dollar. Like example, you need to pay IRS $10,000. You get a R&D tax credit of maybe $8,000. So literally from the $20,000, you are deducting this $8,000 from the final tax liability. It's a dollar to dollar. Then elections. There are different types of elections also there. S corp election. There are different types of elections are there. Each election has a lot of saving opportunities. So you need to optimize all those things. And what we are going to cover today. One big beautiful bill highlights entity structuring, real estate and capital gain strategies, business deduction strategies, retirement planning, and advanced and tax smart investment strategies, which we are going to cover. First, I say that there are around 6 pillars on tax planning. Entity structure and when I first if I focus on entity structuring, being a business owner, this is a base for you. This is the foundation for you. It depends on what type of income you are getting. What is your long-term planning? That will decide your entity structure. Like example, you want to raise funds from the public for your startup company. You need to have a C corporation. If you want to, if you want a passive income, not an active income, like example, you have a residential home, real estate rental property, you need to have an LLC. If you want, and if you want, like example, if you want an international shareholder, you need to have a C corporation. If you want to save social security taxes 15.3% every year on your net profit, you need to have an S corporation. Each company, each type of entity has different pros and cons. As I mentioned, when you started the business, you might have just started like an LLC. But is it the right strategy till now? Or you might be doing some startup in the side gig as a consultant or freelancer. You might be getting a 1099 contract, 1099 income on your name. Is it the right? What is right? And also, when do you want to plan? When are you plan to exit from your business? How long you work on your business? At some point of time, you want to exit it. How fast you want to do it? Whether are you want to exit in 3 years, 5 years, or how long you want to do? Or you want to have this like a legacy business. You don't want to exit. You want to run it as a legacy. Even after you also, you want next generation to run the business. If that is the case, there is a different type of entities are there. There are different types of entities has to be picked and right for you. A lot of groundwork is required. You need to understand your needs. So then retirement accounts. In America, the number of people, the average number of citizens who save for the long term is almost negligible. They don't save money for the long term. So government has given a lot of incentives to the people who save money for the future. Being a business owner, you have multiple options. 401k, solo 401k, SEP IRA, simple IRA, or even mega backdoor Roth IRA, HSA. There are multiple opportunities you have. It's not about one plan. What we do is we combine, we use different types of vehicles together to help you to save money. A lot can be done. If you ask your ChatGPT or it may recommend you one strategy, but what all in mix you can use it? What all can be done? You might be able to use an IRA and SEP IRA. Both you can have. Or you can have a defined contribution plan and solo 401k. Both you can have. Or for regular 401k you can have. So there is a different mix has to be done. You are not an individual who is just on W2, who just filed taxes. You are a business owner. A lot more complexities are there for you. And depreciation strategies. So after one big beautiful bill, a lot of depreciation strategies with one big beautiful bill, Trump has brought back 100% depreciation strategy. That means if you are buying any property or an asset or equipment which has a lifetime of less than 20 years, it will be written off in the year 1. And you can boost this depreciation with a cost segregation. And on average, if you are buying a commercial property of $2 million, on average you can get a depreciation of $300,000 to $500,000 as a depreciation. You need to optimize all these strategies to build the wealth. It is not one medicine to solve the problem. You have to use a combination of some prescription, some injections, some day-to-day medicine, some vitamins. It's a mix. And also 179 expensing. If you're running in hospital clinic, like example a clinic, you might need to do some equipment. Earlier there used to have restrictions on how much you can claim as an expense, but now up to $4 million of equipment you can buy and you can return off in the year one. A lot of planning is required. That's why if you think about tax savings only in the November or December, it will not help. It's already late. It's the beginning of the year. You need to start working on it. And one big beautiful bill. Last year, with our Trump's blessing, a lot of new strategies have come up. Standard deductions has increased, and SALT, state and local taxes. Earlier, we were able to claim only $10,000 as a taxes, property taxes or property taxes and state taxes together. $10,000 if you are filing an itemized. But now you can go on up to $40,000. You need to optimize all those strategies, and even the $40,000 is applicable only when your income is less than $500,000. After that, it starts phasing out. So you need to give every effort to bring down your total married filing joint income to less than $500,000 in a legal base. There are ways available. If any one of you are saying, no, there are no ways, I have to pay taxes, I can challenge you that you are wrong. It is possible. Talk to me once. You can scan the barcode. You can scan the barcode on the slide, on the presentation, and on the deck, on the slide, and you can scan. You can take a screenshot if you're joining from the mobile. After that, yeah, you can take a screenshot of the and you can open this. If you are using an iPhone, you can go back to the images and click that on this barcode. Just click it, hard press, a link pops up. And also 529 accounts, 529 is lot more. 529 savings for our kids. It has a lot more flexibility now. And also QSBS, qualified stock business stock, or qualified small business stock. If you want to exit from your business in the next 3 to 5 years, if you have a C corporation, you don't need to pay capital gain taxes at all. Up to $15 million per shareholder. If you have 2 shareholders, $30 million. 3 shareholders, $45 million. So QSBS is very important. That's why it's very important which entity you choose. If you're running a startup company, if you're developing an AI product tool, then definitely I wanted to consider C corporation. If you're planning to exit, whatever business you are, if you're thinking if there is an innovation, there should be an innovation, then if you're planning to exit it, QSBS is applicable. Then R&D tax credit, research and development. Very less people are not even aware of this. This is one of the many small businesses might be eligible for this, but they miss this. It's R&D is a government is encouraging innovation. If you are doing any innovative things, you are eligible. You may be eligible for the research and development tax credits. For every dollar you are investing or spending, you get a 10% back as a tax credit based on the criteria. Like example, you are developing an AI tool, an IT company developing an AI tool. Whatever salaries you are paying, whatever amount you are spending, they may be eligible for the calculations, and you can get a 10% as a tax credit. Government is giving back and keeping in your pocket. If you are developing, if you are in a real estate, if you are a real estate builder, developer, you might be doing some innovation on the process improvements or coming up with the new designings, then you may be eligible. And research and development, if you are running a restaurant, if you are doing a food production, if you are doing any innovation on the recipes, you might be eligible. If you are doing a manufacturing plant, if you are coming up with the new innovative ideas on process improvements, systems, you may be eligible. So apart from that, these all are lot of tax credits are available. and regular accountants or CPS may not be able to help you on R&D tax credits because it requires a separate set of documentation and expertise like a cardiologist, orthopedic, nephrologist, like that. This is a specialized area. So we have an in-house expert R&D tax credit who has been helping to save millions of dollars for our clients on tax credits. And apart from that, there are many other credits also available. Capital gains and real estate strategies. Being an Indians, being an immigrants, most of us are used to invest either our money either in the stock market or in the real estate. If you're investing in the stock market, definitely I wanted to consider tax loss harvesting. Whenever the market is down, it's time for you to exit and book the losses. Those losses can be adjusted with any gains in the year, in the capital gains in the current year, or the losses can be rolled over to the future period, and there is no there is no line, there is no end on that. There is no limit on how many years you can carry over, and there are restrictions are there. But and real estate. If you are investing in the real estate, whenever you are selling the property, I want you to be actively, I want you to be aware of that 1031 exchanges are available. It means whenever you are selling a property, rather than taking the cash out from your bank account from the sale transaction, you need to go and reinvest the entire sale proceeds to buy some other real estate property within 180 days. Qualified opportunity zone investments. Whenever you have a capital gains, it could be from the stock market or real estate, you have an opportunity to go and invest in 100 qualified opportunity zones which are identified by the government, saying that those are underdeveloped. If you go and invest there, you can defer your tax liabilities now, and wherever you are investing and whenever you exit from that, whenever you sell that second property in the second investment, you don't need to pay taxes on the capital gain as capital gain if you hold it for at least 10 years. And charitable giving. So being a business owner, we are fortunate to earn a bit higher money. We are earning, but at the same time we need to give back to the community. I know that most of you are giving back to the community, and if you are doing that, IRS is encouraging you to do more by giving a tax deductions. You can get a tax deductions for every donation you are doing. Subject to there are limits are there. If you are an individual, up to $2,000 you can do, even though you are filing an itemized. Even though you are filing a standard return. If you are filing an itemized return, up to 60% of your income can be donated, can be given as a charity. So a lot of planning can be done. Instead of giving a cash donation, you can give a appreciated stock, appreciated assets, appreciated securities as a donation, so that you don't need to sell those properties, you don't need to pay capital gains on the transaction, and you enjoy the tax deductions on the fair market value on the day you are donating. And 529 plans. When I'm talking about estate planning. Estate planning is very important for our immigrants. If you believe that if you have more than $5 million of net worth, it's very important for you to start working on your estate planning, because if you are transferring more than $15 million of net worth to the next generation has to pay 40% in taxes, federal and also against state taxes. So this is per person. So husband and wife together $30 million. So a lot of planning is required. And if you are a high net worth individual with more than few millions of dollars of net worth already, then I wanted to consider giving a gift to your next generation. If you have 2 kids, you can give gift to both the kids, $19,000 per year. You don't need to disclose anywhere. You can directly deposit in their bank account, or you can open UCMA account, UGMA accounts in the Fidelity, Vanguard, all the stock brokerage accounts, and you can donate and you can buy the stock on their names. You can give $19,000 each to your kid. Your spouse can also give $19,000 each to your kids. So like that, you are passing the generation, the assets to the next generation now onwards, rather than waiting to something happen. And estate planning, everyone should have will and trust. It's a mandatory, it's not an optional. And we do work with so many attorneys to get that estate planning. If you need any help on that, please let me know. If you have more than $5 million of net worth excluding your primary home, reach out to me. A lot of planning has to be done. If you don't plan, there is no guarantee that tomorrow what our life would be. There is no guarantee that tomorrow morning we get up. There is no guarantee that we'll go back to the home after we go out, once you go out. So planning is very, very important. After that, after all your hard work, if something happens, if you don't do a proper planning, what gift you are giving to the next generation is stress, pain, not worth. Even though you have assets in India, we can help you on getting the money from India to here in a legal ways, including helping you in connecting with the real estate agents in India, selling the properties, getting the money from India to here in a legal ways, and help you on investing in US again. So there is a lot of planning we do. And being a business owner, there are a lot of deductions you are eligible. Home office, if you are running a small business, if you are a self-employed, a 1099 contractor, you can claim your utilities, insurance, HOA, mortgage, a lot of things you can claim. Depreciation is like if you are buying any equipment, assets, supplies, or small assets, if you are buying for your business, you are eligible for the bonus depreciation. You may be eligible for the bonus depreciation. Healthcare, being a self-employed, our health insurance policies are very expensive. You are eligible to claim your health insurance premiums in your business, and you can also claim your long-term care insurance protection also. If you have any questions, reach out to me. I'm happy to help. You can see my contact details. And also travel and plan. If you are attending some different conferences, travel, if you are meeting clients, vendors, prospects, then all your travel expenses and meals expenses are tax deductible. And there are some limitations are there, but it is still possible. And coming with just reminding one more about R&D tax credits, which is very important. Industries, people think R&Ds are only for IT companies. No, R&Ds are eligible. R&Ds can be applied even for many industries. You might be in the food manufacturing industry, you might be in the distribution and logistics, you might be in biotechnology, you might be in generic drugs, you might be in the construction, you might be an architect, or you are whatever you are doing. If you are helping on improving the processes, systems, using a latest technology or developing a technology, if you think that you are innovating something, you might be eligible. Please talk to me once. And charitable tax smart investments. Whatever money you earn, IRS designed the system in such a way you need to go and reinvest somewhere. Where to invest? There are some tax planning opportunities are there by investment. Like example, if you are investing in your 401k, you enjoy 30%, 40% taxes. If you invest in stock market, you don't even get $1 tax savings on your stock market investments. But if you're investing in the 401k and invest in stock market, through that you enjoy the 30% tax savings. So there are many investment opportunities are available. Many of our Indian community members, our first immigrants, are not familiar because we are not studied here. We have not grown up here. Lot of depreciation tax savings opportunities are there, and like a car wash opportunity funds are there. Right now we are working with an active fund where they're raising the $200 million of fund where they're investing in car wash stations and convenience stations, where you go and invest there, you enjoy returns in depreciations as a negative depreciation, as long as you can prove an active participation. So there are different strategies are there. If any one of you are interested in understanding this in more detail about these investment opportunities, please reach out to me. You can see my contact details or you schedule a meeting with me. So, but because I won't be able to go through everything now in this session. And at the end, how AG FinTax can help. AG FinTax, we do 360 degrees review of tax and financial health checkup. We do a complete comprehensive review of your current tax position. We review last couple of years of tax situation, tax returns, identify what are your thing missing, and also a financial planning. What you are now, what is your long-term planning, where you are now, how have you done your retirement planning, have you done your kids education planning. We do all those things. Then custom tax planning. After getting all your inputs, after doing all the tests, we write a prescription custom tax plan, a tailored strategies based on your income, entity structure, goals, and risk tolerance. And strategy execution. We don't only not only write the prescription and give it to you. We will be with you like a fitness coach. We ensure that you are implementing every strategy. We don't write a prescription for you saying to reduce your weight, go to the gym, do 20 minutes of walking, 20 minutes of push-ups, 20 minutes of cardio. No, we be there with you as a fitness coach in implementing all the recommended strategies. We help you on your entity changes, retirement setups, depreciation, elections, and many more. And the last, long-term advisory support. We do a year-round planning. We meet our tax planning clients every quarter. This session is only for the tax planning, not for the tax filing. And we do every quarterly we check. We do a proactive adjustments as the law changes. If any new law comes up, we are proactive. And our objective, our guarantee to you is to get you the value for your investment. So yeah, that's what we are, and we are happy to help. We are happy to work with you. 1 second, I am sharing a lot of people are asking me my calendar link. I'm sharing my calendar link. So you can set up a free one-on-one meeting with us. I just send you a calendar link in the chat box. You can schedule a meeting with us, or you can even reach out to us if you need any help. And at the end, there are one slide I missed. At the end, what I want to say here is, we are here as a team to help you in building the wealth. For every success will come only through a proper planning. That's what AG FinTax. We are not only tax filers, we do beyond. Tax filing is only one small element at AG FinTax. So, and also when we do the tax planning, we don't just, tax filing is like a template. You give the numbers, plug in the numbers, and file the tax returns. But planning requires a lot more efforts. We help you on retirement review, tax smart retirement reviews, deductions review, legal entity structure review, insurances, loopholes, the latest tax updates, and also tax smart investment strategies. We guide you in all those things, and that's where, and we say that and whoever is signing up for the tax planning today by scheduling a meeting with me, they are eligible for 10% flat tax deduction on our tax planning assignment. So this is only for the people who are signing up today. Only if those are eligible, but otherwise I won't be able to help. And I already shared the calendar link in the chat box. And when we do, and the first session is a free tax assessment. We understand your situation. We see if we can help you or not. And our commitment to you is, if I cannot bring the value, you don't need to pay to us. We need to bring the value. That is how you don't need to pay our fees. But we strongly believe that with an experience of working with thousands of clients, we should be able to help you. And there is no wrong in talking. Just talk to me once. It's a free meeting. I share the link and you can schedule a meeting with us. And thank you very much. And there are some questions are there in the chat box. I will go through those things. Good. One question: when you sell a home, instead of going for 1031 exchange, can you invest in opportunity zone funds? Answer is yes. There are many zone funds are readily available. If you want any connections, I can directly connect with them. Being a financial advisor, we work with so many fund managers, so many investment opportunities all the time. I mean, I don't own a opportunity zone fund, but I can do some connections based on the feedback, based on the due diligence what we do about them. So you can reach out to me. You can just send an email to me. You can see an email hello@agfintax.com. I'm happy to guide you. Are there any age limit to kids to give gifts to the kids? Sachinarayan garu, no. There is no age limit to give gift to the kids. You can give gift to them. It's not a tax deduction. Don't get confused. Giving gift to the kids is only estate planning, not income tax planning. So you can give a gift, but it is not a tax deduction. Please, I hope you followed that. What about fixed deferred annuities as part of retirement? So definitely those are good ones. We have been but there it has to be customized. We have fixed and also income annuities also very good. Alka ji, if you want to talk, I am happy to work on income also. Fixed has some limitations, but income is much more flexibility. So I believe one of the insurance agent might be trying to guide you on that. But the thing is, there are two options are there, fixed and income. Income is much more flexibility, but we can talk offline. You can schedule a meeting with me if you want. You know, just casual conversation we can have. I can guide you in more detail. And Amar, what's your fee structure for tax planning? Is it a flat fee or a percentage of gross income? Good. Very good question, Amar. We don't go on percentage basis. Many tax planners, they charge 20 to 30% of the fee what they save. If they are saving you $100,000, they charge a fee of $30,000. But as we know, we are in Indian community. I work with a closed conservative community, so we don't charge like that. But yes, we have a flat fee model, but it depends on the complexity and your income level and what is the opportunities we have, how much time and efforts were there. But it's a flat fee. There is no percentages. Yes, can I set up a free one-on-one meeting? Of course, yes. I share the calendar link. Just casually talk. What do you lose? A 20 minutes talking with an Anil Grandhi, who is a financial expert, will only help you rather than losing the money. Just talk to me once. Okay, what if your itemized deductions are more than taxes one owes? Yes, okay. Does IRS refund money same year, or one has to carry over the deductions following year? And how many years can one carry over unused deductions? Okay, good question. If you're at the end, if we have some, instead of having the profit, like generally we pay taxes based on our taxable income. If you don't have any income, sometimes I do see that we have losses. If you have the losses, IRS will not give you the back, but will not pay you money if you have the losses because of deductions. Because of the deductions are business losses. But you can roll it over these losses to the any period of time. There is no time limit. You can roll over to long time these losses. So you can adjust these losses with any future incomes. How long is QG or qualified opportunity zone is valid? Yeah, it's a good question. Right now, we are on qualified opportunity zone 1.0. That means this has come up in 2018 tax law, which is going to end by this year. As per the current rules, you can invest within 6 months from the day you got the capital gain. And once you do this, next year in 2027, you need to pay your taxes instead of paying taxes now, you can pay the taxes in 2027. That is not attractive. But the second leg, wherever you're investing, if you hold the investment there for the next 10 years, then you exit it, you don't need to pay capital gain taxes. Now I will talk about opportunity zones 2.0. Same rules, but the one big beautiful bill has changed it substantially. This rule is applicable from the January 1st, 2027. But if you are selling any properties or stock market, securities or real estate after July 8th, then within 6 months, you can invest in opportunity zone 2.0, which gives you a lot more benefits. How it benefits? Benefit one, number one, you can defer your capital gain tax liability payment to 5 years of time. Number two, if you hold the property for 10 years, that's wherever you're investing in QOG, then you need to, your tax liability will go down by, your basis calculation will go down by 10%. And opportunity zones are available even in the rural areas. As per the new rules, if you are investing in the opportunity zone which is in a rural area, your basis of capital gain calculation will go down by 30%. So we are going to have a separate session on opportunity zone funds, but I hope I covered it very high level. Can we open trading accounts for kids? There is a kit. Okay. You can open it, but you need to pay taxes on the capital gains as per your tax laws. There is a if kids are making money as a passive, then and if they have the assets and they are making a passive income, taxes they need to pay based on their income levels. But if they are generating an active income, that is, they have a trade account, but you are, as a parent, you are managing their account. If that is the case, then you need to pay but then you need to pay taxes for that income at your income level, not at your tax rate, not at the kids tax rate. Pradeep, kids gift will count towards overall limit of 15 million. Good one, Pradeep. No, that is why I say that anything, okay, every year we have a annual gift tax exemption limits. Every year you have this year $19,000, up to $19,000. You can give gift to anyone. You don't need to report to IRS. If you give gift for more than $19,000, then you have to report, you have to file a gift tax return, and it will be considered under estate planning of $15 million of limitation. So thanks, Anil, great presentation, thank you. And I'm just reading the messages. Will you be sharing the slides with this group? I'm sorry, we are not sharing the slides, but we are going to do many more sessions like this. So feel free to join for the future ones. If you have any questions, schedule a meeting with me. I'm happy to answer. Please address, when you sell a rental home, instead of doing 1031 to buy another property, can you invest in qualified opportunity zone to defer taxes? Answer is yes. And which opportunity zones funds you recommend? As I mentioned, SS, I don't know what is SS means. There are many funds are available, or you can identify a property which is there in the opportunity zone area. You have 6 months time to go and invest. Or if you think that you don't have time, there are funds are available. Please connect with me. I can do in one referral connection I can do, one introduction I can do to a opportunity zone funds, guys. There are many funds are available. SS. Does bonus depreciation apply to the personal real estate rental properties? Answer is yes, but bonus depreciation is recommended to optimize it only when you have active real estate income. In the real estate income, there are two types of income: active income, passive income. If you are having a rental property, by default it is a rental by default it is a passive, unless you are a real estate professional. There is a separate tax status. So bonus depreciation is recommended, or cost segregation is recommended only if we have active real estate income. I hope you followed it. If you want, you can schedule a meeting with me. What is the procedure to make the IRS taxes owed in installments? Do we need to set up a call and setup? Santosh, there is a separate form which we need to submit to the IRS along with your tax return. If the tax liability is for more than $50,000, you have to give a detailed your personal financial statement to them to prove that you are financially stable and you can pay the taxes over the time. So, but there is a lot of documentation is required. You need to submit a request if it's more than $50,000. IRS has to approve it, then it will be converted to the installment plan. Satya, Can we transfer stock instead of cash to the kids? Answer is yes. Is there any age limit to open trading accounts for kids? What is the cost basis for kids if we transfer the stock? Good question, Satya. When you transfer the gift stock, appreciated stock to the kids, the basis would be fair market value. That is what their basis at that price. And do you have trading? Is there any age limit to open a trading account? I don't recommend to have a trading account for the kids' name because they need to pay taxes at parents' tax rate. There is no additional advantage by having the trading account. Rather, I want you to open a regular stock brokerage account, invest and leave it. Or you can do small transactions but not a trading. PA, it is going to be consultation only with you directly or someone from your team. Does that cost differ? Good question. Right now you can schedule directly meeting with me. So you are not people who are attending this webinar. I shared the calendar link. This link will not work from after 24 hours. If you are scheduling a meeting with me, I am happy to directly talk to you. But after that, again, I need to optimize my time. During the business hours, I need to optimize my time. My team also will help. So based on the client profile, based on availabilities, our team's availabilities, we pick the clients and we talk. Sudhir, can you clarify opportunity zone and opportunity zone funds? Funds are something can buy within the brokerage. Good question, Sudhir. See, as I was mentioning, IRS or government has identified underdeveloped areas and they tagged those areas. Like example, if you are living in Seattle area, there are some areas in Everett area, they are underdeveloped. There are in every city has underdeveloped areas. If in that area, it's called opportunity zone. You can go and invest either in the business or in the real estate. If it's a fund, someone is raising money from the public, they go and invest in those areas in a bulk, millions of dollars, maybe 50 million, maybe $100 million worth of funds they raise and they invest. So you have an option, either you directly go and invest in opportunity zone areas or go and invest in the funds. If example, if you have $50,000 or $100,000, there is no point in going and you cannot, instead of investing in one single property or somewhere, you can directly invest in a fund. Funds are good. There are very good funds are there with a very good track record. And you cannot buy within the brokerage. There are outside funds are there. Any investment outside comes with the risk. Please be aware of that. Rajesh, good presentation. Oh, super. Okay, Rajesh Khanna. Okay, everyone can read this message. Thank you very much, Rajesh Khanna. Good presentation, and I did my taxes with you this year. Your team is very good and that answered all questions. Anil is very good. Refer few clients, few friends already. Thank you very much, Rajesh ji. Our business only goes through referrals. Otherwise, it's very difficult to get a client because it's a finance, correct? Everyone is not ready to share the things. So, but really, I really appreciate Rajesh ji. Thank you very much. So, and we have hundreds of clients. We have so many great reviews we have. You can go and visit our Google review also. This year, only this year, go and review Google reviews. How many reviews we got? And yeah. And Alka, if you invest in opportunity zone funds, does one have to pay taxes on those funds? No. Funds are like you are investing. You are not paying any taxes. You are deferring the taxes, but you need to pay taxes. But whenever you exit from that fund, you don't need to pay any taxes if you hold it for 10 years. Yeah. Okay. And thank you very much. If anyone has any quick questions, one or two people can unmute and ask me the questions. You can ask me anything, finance, money, savings, passive income, active income, or real estate income, or 401k accounts, or estate planning, will, trust. You can ask me any questions. I'm happy to answer. Arun, can we consider kids as employees in S corporation? As long as you can prove that they can bring the value, it's a genuine, you are good. Ram, is your Wednesday presentation recording available? Sir, if you can send an email to me, I'm happy to help you, sir. My team can send you the calendar link to you. Sorry, meeting recording link with you to you. Good, sir. Are there tax consultants from offshore who file taxes? Answer is yes, sir. We have team in India, but because of American Indian community is a very conservative community. We cannot build clients like American clients. That Indian community is cost sensitive. To serve the best, we need to have a supporting team in India. Yes, we have supporting team in India, and we have so many chartered accountants, and we maintain very high data confidentiality. I work for Amazon, Starbucks, PricewaterhouseCoopers, corporate levels. I give highest priority to the data security. So I don't think you need to worry about the data security or anything. But yes, even India also there are very talented people are available. We know that. We all Indians, we know that how strong we are, how much talent, how is talented. We have very talented people in India also. I don't see any problem with that. Thank you. Which email ID I should send email to get the recording for the tour? Okay, sir, I am sending you an email, sir. hello@agfintax.com. I just sent you an email ID. If anyone wants any recording, you can send it to email to me. But thank you very much. Thanks for your time. Looking forward to one-on-one call with you. We will be sending an email to you again with a calendar link to schedule a meeting if you miss the calendar link. And you can reach out to me and I'm happy to help. Let's talk once. What's the big deal? What you are going to lose if not learning something? Talk to me once. It's a 20 minutes free consultation with Anil Grandhi directly, whoever is attending the call today. But don't claim this later again, because I have a 130 employees team, and I also need to optimize my time. And thank you very much. I appreciate your time. Thank you. Bye.